Well, hi and welcome to another quick Pat training video. Now this one, like most of them, is in response to a question from a Pat user, and his question is relative to how the market is currently reacting. In other words, normally we'd be looking for this bit of a retrace for a low risk entry, and in this particular case, or this particular condition of the market, it's getting off and things are getting underway very quickly. So that's what we're going to cover in this video. Well, here we are on the Pat chart, and what I want to do first of all is get rid of me, so we'll kick me off there and pull up the Pat chart. Now, the very first thing that I want to bring to your attention here is the fact of how tight this market has been ranging. So in other words, if you look right from, let's stick on the date on here, from the 27th around here, right up to present time, this market has been stuck pretty much in this 90 pip zone, if you like, this accumulation area running through here, accumulation manipulation, and it's been trending up and down through this, or whipsawing up and down through this period here. And this by its very nature is extremely difficult to trade. Okay, so normally what we'd be doing is we'd be looking for the market to give us an indicator of like a stop take, then we'd be looking for the market to kick off and then get into a profit release. Now what I'm going to do now is I am going to go over onto the 15-minute chart. I'm going to zoom up to the present time we can see, and here you can see this is where the market kicked off from. Hopefully you can see that nice and clear on your screen now. In fact, what I'll do is I'll just try and make that a little bit bigger so we can actually zoom out on there, make that full screen so we can see on there. Now you can see what we've got here is we do indeed have a nice stop take there down there. You can see, so any stops placed around this area here, see the market move back down, punches these out, and then the market gets into an up move. Now, what Tony's saying after this is that he normally would be looking for, what we would be looking for is a low risk entry, and that is a retrace area that we want to look at. In our particular case, we will be looking for around a 15 pip retrace. Now we have a tool for that, which is what we click on here, and we'd put this on here, and then we would look around for a retrace after that, and you see the retrace comes down and get back in here. Now, in this particular case, because the market is sort of stuck, it's sort of trending within this manipulation area at these 90 pips, you can see that this actual retrace takes it back down into the lower lane of the floating zone here, where really it'd be much better if we had a retrace into the top part of our floating zone, and then we'd be quite confident that that retrace was much higher value, let us say, and then would be into the up move for the profit release. Now I don't advocate this is a normal thing, but what I'm going to say to you at this point is that when the markets have this this amount of manipulation, and we're looking when the markets suddenly just break off and take off, this is a time when you can go down to a smaller time frame. Now this is exactly the same, I'll just open this up for you here. This is exactly the same market and the time, and you can see what I've done here is I've just used the same tool here, and I've dropped this down. So again, we click on our retrace through here. Sorry, stop take. So you can see there where stops putting through there, stop take through here. Market then gets back in, starts to move down again, and then we get this area here. And then we get this jump bar up through here. And this is when we would be looking for the retrace after this, somewhere after this, to get in with that low risk. And what we happen here is that we get a retrace, but we'd be expecting it to get around to the bottom of the three yellow lines here, which is around the 1 spot 0509. You can see that over here. We'd be expecting it to be around here, and then we'd be looking for an entry here and then trade out of this. Now, what I'm going to say to you is here, the thing that you can do to counteract these fast moving markets like this is move to this lower time frame, but then literally look at, don't wait for this the full retrace through here, because remember we're dealing with the speed of the market and the energy that's coming out of that concentration effort of, let's say, of manipulation. And you can see what we get out of here as well. And look at this jump bar that we get out of here. So the market literally powers off out of here. So this, at this point here, would be our entry. And this is when then we would trade out of there. So what I'm trying to say here is basically in a market situation where there has been a lot of manipulation, there's a lot of energy contained up in that, and the markets tend to break out of these very quickly. And part of this is because of the the war, of course, going on in Ukraine. We're getting all this volatility, but we're also getting this volatility within a range, as it were. And it's very important to understand that when you get this condensed manipulation, when it does break out of it tends to break very quickly. And that is why you can drop down to a smaller time frame at this. But really that time frame is only about finding that smaller retrace and certainly looking for that jump bar out of there to get onto that move. Now, I hasten to add, this is, like I say, 5 minutes time frame is really not something that I like to use, and I would not use it unless it was in these type of circumstances where I needed to get into a market out of this tight area of volatility. Anyway, I hope that helps, and I'll catch up with you very soon. Take care.